JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 13th of March 2020. So yep, welcome everyone. Welcome to this Friday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, also just before we jump in, quick mentioning of our YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we update on a daily basis as well. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there. Right, now then, before we jump into the charts, just a quick refresh of what's happening with the coronavirus. Of course, it's now surpassed the 130,000 confirmed cases globally, and yep, increased the total amount of deaths to 4,981. So continues to rise. Not a very pleasant, of course, situation. UK came out recently confirming that they have increased cases from going from 500 to 798, so basically roughly around 800. Also something which is not very good, but in a way for now, I mean, everything it is as it is right now, and the only thing is that China kind of is showing a bit of a slowdown in the confirmed cases. So yep, something that is quite good, let's put it that way. South Korea also is showing good results, maintaining the spread, but unfortunately Italy is not really doing well in that scenario, in this sense, yep, we now can see that Italy has surpassed 15,000 limit. So yeah, so continue observing the details, data, and yep, let's see where this is gonna go. Now jumping into some instruments here, the FTSE 100. Now I talked about this one this morning, and to be honest, I kept talking about this one this whole week, but basically this is what I was mentioning this morning, that given the fact that we managed to rebound a little bit, all eyes are on the 5,500 level, and I've told you guys this morning that if we get a nice push above this, then in a way we could see further move higher, maybe a bit of more correction here to the upside. For now, anything below this downside resistance line could be seen still as a temporary correction before another leg of selling. So all eyes are on this 5,500. You can see that the price is currently balancing around it. In a way, of course, given the fact that yes, maybe there is a bit of a slowdown in China, Europe continues to confirm these cases. So this push higher right now that we're seeing, and this could be just maybe a bit of a breath of fresh air before another leg of selling. So that's why keep your eyes on this one, guys. For now, yes, we are pushing higher. If we stay above the 5,500 mark, next week we may see a bit more maybe upside here, a bit more correction to the upside. But if this downside line continues to hold, then yeah, we could see another round of selling, potentially even dropping back towards the current low of this week around the 5,230 mark, or even going further down towards that 5,100 level that I've mentioned this morning. And just to go back into history a little bit, the 5,100 is near, is this the correct one? Is this 5,100? Or it should be maybe a little bit lower. There you go. So 5,075. There we go. Just a little bit more accurate number here. That's basically the lowest point of November 2011. So something to consider, something to keep an eye on. But of course, for now, all eyes are on this 5,500 level, because that's the lowest point of February 2016. And as you can see, or in other words, actually the lowest point of 2016 in general. So keep your eyes on that level. If we get a close today above that, then of course the weekly candle will close above this as well. So could be maybe something of a little positive here in all this madness, and maybe we could see a bit of a correction here to the upside. For now, let's keep an eye on this one. The S&P 500 now managed to open nicely with a gap to the upside, or actually there is no little, managed to basically open to the upside. Yesterday I talked about the S&P, and I've looked at the monthly chart where I was comparing these two drops here, where as you can see, the index managed to drop almost the same amount, or actually dropped the same amount as it did in 2007 and 2008, dropped around 910 points. But of course, we had the same drop right now in these couple of weeks here. A few weeks, I would say, also 900 points, a little bit more than that, but of course logical that the percentages here are different. Last time the 910 point drop equated to roughly around the 57%. Right now it's equating to roughly around 27%. So of course, again, percentage-wise, it's not as drastic as we had here in 2007, 2008, but just it's very interesting to compare these two numbers. But what other thing I was mentioning, guys, in my yesterday's video, that keep your eyes on this upside support line. So I've drawn this one yesterday, the upside support line taken from the low of the 3rd of October, or sorry, the lowest point of October 2011, and as you can see, the upside line worked out perfectly. So again, guys, for now, the big question here is, can we continue trading above this? Because if we can, then this is where it could become very interesting for the buyers. But if it struggles to do so, and we see a drop below the lowest point of December 2018, this, or in other words, the lowest point of 2018, which is around the 2,346 zone, then yes, further declines could be possible, and this is where it could turn out to be very ugly for the index. So basically, we are at a very interesting spot. Yes, we got to hold up near this upside line. But let's continue monitoring this, because the month is not finished yet. We still, of course, continue having these increases in coronavirus, and people affected by the coronavirus. But something to keep an eye on, of course, because maybe the market could be already pricing in. So now it depends on how fast this is going to be spreading. If the numbers are increasing, then yes, of course, that's bad. But if the speed of the increase is slowing down, then well, then maybe we could see a bit of a correction here in the market, because maybe the market will get immune to this, and maybe we could see a bit of a correction here to the upside. But again, for now, from the technical side, of course, also keep your eyes on this downside resistance line. Let me just quickly draw this one on the chart. So this downside resistance line, in a way, if the price drives higher but fails to move above this downside line, then yes, of course, we could see another round of selling. But if this downside line fails, well, I mean, we could see maybe a larger extensions to the upside. So for now, this is the idea. Let's see how this is going to play out. Of course, today is the last trading day for this week. If it remains above this upside line, now this is where above this long-term upside support line that I've mentioned previously, then it will be very interesting to see how everything plays out next week. So keep your eyes on that one. Another index, but this time is a dollar index, and yep, and it continues to fly higher. as you can see, it managed to break this downside resistance line. Let me just jump quickly onto a 4-hour chart. So we managed to break this downside line here, taken from the high of the 21st of February. So it pushed higher, and then this line actually also acted as a good trampoline here for another jump. And yep, for now we are aiming higher, but what we're going to do here is, for now we will aim higher, but only up until this upside support line. Now, because this upside line could act as a good area of resistance, so keep your eyes on this one, guys. This upside line is drawn from the low of the 31st of December, and we'll see if the acceleration can get a hold up somewhere near this line, somewhere underneath this line. So something to consider for now, guys. Yes, we could see another push higher, but let's be very careful around here. If we get a break above this and we see if we see DXY staying above this area and staying above the 98.70 mark, somewhere around here, then yes, where we could maybe drift back up here towards that 99.91 level, or even that psychological 100 zone. But again, that's in the scenario if we get a push above that upside support line again. For now, we will only target that this upside line. In terms of the downside, now let me just recycle this line here. We would need to see a drop back below the 96 or in a way you could round it up towards 97 mark. If we get a drop below the 97 zone, then, well, I mean, we could aim for lower levels again. For now, keep your eyes on these two. Brent oil, very quickly on this. Basically, after it dropped heavily on Monday, it kind of remained almost at the same spot, so kind of oscillating here around this $36 mark. For now, looking at this picture, and let me just jump back into a daily chart. For now, to be honest, what we're going to do is just going to wait for next week and see how it performs. If by any chance it travels back above the 36.14 zone and climbs above the high of the 11th of March, which is Wednesday, then maybe we could start aiming for a bit of a larger correction to the upside here, and that high was around the 39.60 mark. So if we get a push above this, then yes, we will aim for some higher levels, but only up until this downside line taken from the high of these of the 8th of January. In terms of the downside, pretty straightforward. If we get a drop below the low of this week, which is around the 31.30 zone, then yes, we will aim for that 29.95 mark. And let me just quickly remind you what that level was. That was the lowest point of January 2016. Is that correct? Oh, I do apologize, guys. The 29.95 was the lowest point of February 2016, the lowest point of January 2016, and the lowest point of 2016 in general was around the 27.13 zone. So we'll keep an eye on that one. This could be a nice, interesting area for support, but in order to kind of aim for that territory, we would need to see a nice good drop below the this week's low, which is around the 31.30 zone. So keep your eyes on that one. Ripple, very quickly on this. So managed to create a new low near today, of course, near the 0.11 zone. So this is it dropped heavily, but let me just get rid of some of these lines here and look at this from fresh. So basically managed to test the areas around the 0.11 mark, from which it rebounded and is now currently trading at around 0.1645 area, approximately around there. It's trying to make its way higher, but we do have a good area of resistance around here, which previously acted as a good area of support, and that's around the 0.1760. So if it struggles to push above this barrier, then, well, we could see another round of selling. Now, just to kind of refresh your memories on where we have fallen to today, this is what I'm looking at here. So this is basically this level here, the 0.11. It was even a lower. It was even lower than the than ever, to be honest. There we go. So or I should not be maybe ever, but as much data as we have here on our chart. So even dropped below this lowest point of 2017. So good brief drop. Of course, for now, looking at this picture, you can see that it's trying to climb back to the upside. But again, let's like I said, let's take it with a pinch of salt. Yes, we are quite overstretched to the downside, but again, if it struggles to push below this downside resistance line, let me just quickly put this one on the chart. If it struggles to drop below, to drive above this downside line, then yep, we could see another round of selling. But if we do get a push above this downside line, then well, keep your eyes on some of these higher levels. But probably for now, let's keep it as it is here, and if we do get this breakthrough through this downside line, then yes, we will aim for higher levels. USDJPY. Now, I've looked at this one this morning, and what I was telling you guys to keep a close eye on this downside line. Let me just jump into a 4-hour chart. Now, we had a nice break here. We had a nice push above the 105.92 zone. That's wonderful. We even had a push above the 106.82 mark as well. So basically all this is kind of really looking attractive right now. We are above the 100 EMA here on the 4-hour chart, shown as the green line. And it seems that the pair could be holding its path towards the 107.74-75 zone, somewhere around there, which is the high of the 4th of March, or towards this 200 EMA on the 4-hour chart. Slightly above that, we do have the 108.58, which also could be a nice potential target. That's in a way initially was our target, but for now, probably given that we already had a nice good move here, we'll only target this 200 EMA. We'll see how it performs around there. If it wants to push higher, then yes, we will aim for that 108.58. But if it struggles to do so, then we may see maybe a bit of a correction here back to the downside. So keep your eyes on this one. With the downside, well, what we could do previously, we looked at this level here, the 103.05. Yes, of course, this still remains a very nice area for us to consider the downside from. But what we could do here is start looking at some lower levels if we get a drop below this little territory here, the low of 12th of March. Is that the low of 12th of March? That's an intraday swing low of 12th of March. That's around the 104.48 zone. So again, a nice good drop below this could lead slightly to some lower levels, but again, we'll be very careful because the preferred level for us for the downside is this 103.05. USDCHF, very quickly on this, also manages to push higher. Of course, that's all coming in line with the markets right now, pushing a little bit higher for a bit of retracement. And yep, we're seeing some weakening of the safe havens such as Swiss franc and the Japanese yen. So USDCHF traveled higher, but is currently getting a hold up near this 100 EMA here on the 4-hour chart. It managed to reach the area around the 0.9555 mark, from which it kind of retraced back down. Now we'll keep on moving higher, slowly, of course. If we get a push above this high, the 0.9555, then yes, we will aim for the 200 EMA here on the 4-hour chart. And then if the acceleration is still strong, then we might even target this downside line taken from the high of the 29th of November 2019. So again, for now, be very careful. As you can see, also we are trading now above this newly established short-term tentative for now upside support line. So in a way, even if it drifts a little bit lower, if it remains above this upside line, then yep, we could see maybe another round of buying. But still, the more attractive level for us for the upside, from which to consider the upside, is the 0.9555 level. In terms of the downside, we need to see a drop below this upside line and a drop below the low of today, roughly around the 0.9419 zone, and then yep, we could consider some lower levels here, but for now it seems to be willing to drive further north. GBPUSD, very quickly on this, so it's currently balancing below the 1.2514 level. I talked about this level this week, but what I was saying initially this week was that if, as you can see by the arrows that are still kind of stuck here, this was my previous analysis. So if we see a drop below the 1.2825 zone, then yes, further declines could be possible. Initially, what we're going to be targeting will be this 1.2724 zone, which we managed to reach perfectly, and yep, it continued to slid lower, and our other target was this 1.2514, so which we also managed to reach. Now again, we'll see how it performs around here, because if it gets if by any chance it stays above this level today, then we may see maybe a bit of a correction here to the upside going into next week. But if it remains below this level, then well, yep, aim for further declines, guys. In order to aim for slightly higher levels, or should I say for a bit of a correction here to the upside, we would need to see a pushback above the 1.2724, and only then we will aim for the upside. And finally, Euro USD. So continues to work perfectly as I've mentioned it, and as I talked about it this morning. So what I was saying that this morning, basically we had a nice rebound from this upside support line. We were hanging around here, but what I was saying that if it starts falling back below the 1.1173 zone, somewhere around here, then yes, we will aim for this upside line again, as you can see, and we'll aim of course for this 1.1095 zone, which could act as a very nice area of support. So what we're going to do here right now is we're going to monitor this level, the 1.1095. If the rate continues to balance above it, and let's say struggles to move below it, then we'll probably we might not even get this test of the this upside line. We could even reverse earlier. So but for the upside, in order to aim for higher levels, ideally, probably now we would like to see a push above the 1.1213 zone here, or even better, the 1.1238 zone, which is the highest point of December 2019. So a nice good push above that, yep, could lead the pair higher. Of course, this is more for those who are more on the cautious side. For those who are more on the riskier side, keep your eyes on all this territory, because if it continues to hold, we may see a nice rebound. But if it struggles to do so, if this upside line starts breaking, well, this is where we will become a little bit more cautious. For the bears, probably to get excited a little bit more, a drop below this little intraday swing low here, is that no, actually the low of March the 2nd at 1.1036 zone could do the trick here for more buyers. Oh, sorry, for more bears, for more sellers, and then more of them could be joining in here and driving this one potentially lower. For now, yes, until this upside line remains intact, still there is a good chance for this one to reverse and push higher. You can also keep your eyes on this little short-term downside line. Yep, and as you can see here already on the chart, there we go. So you can see keep an eye on this downside line here, just in case, just for that extra confirmation. But this is where these two levels, the 1.1221 and the 1.1238 zone, this is where these two levels come in perfectly, and a nice good pop above those could, in a way, lead towards higher levels. Okay, guys, I really hope you found it useful, and just to kind of let you know that from Monday, unfortunately, we will we won't have the live stream. It might come out as, or it'll definitely come out as recorded. Still working on the whole live thing, but it might be that there won't be any live session. It will come out as recorded session. So it's all, of course, due to the ongoing coronavirus situation. So that's why, guys, next week on Monday, 9 o'clock GMT, sorry, 7 o'clock GMT time. Yep. Keep your eyes on the recorded session. So like I said, the live one might not happen. So keep your eyes on the recorded session. Yep, I hope you found it useful. I hope you stay safe, guys, during the weekend as well. I hope you have still a fantastic weekend, and we'll catch up on Monday, as always, at my Traders Espresso, 7 o'clock GMT time, but this time it will be a recorded session. Thank you very much, guys, and bye-bye.